chart of the S&P from May through September. Then I have a next chart will show you September through December. What this shows is a pattern of how percentage-wise, basically, or in how intense the movement is in a certain direction during certain periods in the market, in the S&P. Like it'll show you here from June through August, the market tends to be more in a sideways pattern. So it might go up, it might go down, but it's not a definitive trend. So what we're looking for is a 2 to 3 month period where we see a definitive trend in one direction. Not just a couple of weeks, but a 2 to 3 month period where we have a definitive trend, either up or down. In this case, for the end of year pattern, we're looking for a definitive trend upward that lasts 2 to 3 months, okay? And it should be a clear-cut trend. When you see it on the chart, it just stands out. It is going up, okay? And so this is from April through September. Now I'm going to switch to the chart from September through the end of the year. And this is the chart from September through the end of the year. Starting in October is when this move starts to happen, and is over the last 40, almost 40 years, about 38 years or so. All right, it shows a definitive pattern in the markets at the end of the year, okay? And this is a time of year that we want to capitalize on this end of year trend. And this is something you only see with the seasonal charts. Now, there are a couple of places where they are nicely laid out like this for us. Seasonal Trader is one of them. There's some software we had paid thousands and thousands of dollars for a long time ago. We don't use that anymore because we have other much less expensive options, more efficient options. But this graphs it in a way so it visually jumps out at you. So one could say, well, we have a trend here. There's only 2 weeks, okay? This is 2 to 3 months, and it goes into January also, okay? So when we look at the seasonal charts, we look for a definitive trend that lasts 2 to 3 months that repeats in the market, and this has been going on for the last 40 years, okay? There is a statistical edge that if you go long, you will have a statistical advantage of doing well at the end of the year, okay? But only if you have a valid trade signal. It is not meant to just, oh, here's the date, I'm going to go long. It doesn't work like that. You still have to have a very valid trading method where there's a statistical expectation of profitability, and when you take those trades long during that time of year, if you normally got 80-something% wins, that 80-something is going to go up to 90-something% wins. That's the difference, okay? So that's what I'm looking at today. This end of year, specifically this end of year pattern, because we haven't gotten the buy signals yet. When they happen, for all the people I'm currently coaching, now is going to be the time to jump on this. You all know what the trade strategies are. You're going to be jumping on it. For the end of the year, this is when we make the biggest profits with the biggest trends, most consistent trends. All right. So what I'm going to switch over to now is a spreadsheet with, let's see, hang on a second. ETF option trades. And what we're looking at is the period from September 15th through November 15th as the time to get the most out of this existing seasonality trend. For those of you who know our trade strategies, take a look at some of these strategies. You all know these already. So these are some of the strategies we trade. Over the last couple of years, from 2019 through 2021, 97% winning trades. 211 trades total on the long side, 205 winners, 6 losses. And you guys who already do this with me know we average about 80-something% wins. During this time at the end of the year, your percentage winners go up significantly because you are adding seasonality to your decision making. There are times in the year when I focus purely on futures, and there are times of the year, like right now, my focus is heavily on options because I know this is when I'm going to make the absolute most money trading the ETF option strategies, okay? And as you all know who are working with me already, we have not had the buy signals yet. We've been in short mode. We've had all the sell signals, and they've been doing awesome, of course. So now we're just waiting for all the buy signals to happen. So 97% wins. This is going from 2019. If you take a look in this column, here are the losses. 2019, win, win, win. Lots and lots of wins during that time period. Lots of wins. 2020, 1 loss here. All win, 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 win. Couple losses in November. 2020, going on, just win after win after win during this time period. 2 losses in 2021. It is just a time that our normal trading pattern gets amplified. So this is why I put it out there every single year that this is the time you want to be trading these strategies. There's a significant edge on the long side, but we're not guessing. It is only when we get a valid trade signal with one of our strategies, then we take the trade. So you see 97% wins on the long side. Now the short trades are good also. You know, they're really good, but let's take a look at the difference. During the same period on the short trade is 87% wins, okay? This is more like what we expect. We don't do anything where we expect less than 84% wins. That's our absolute low end, okay? But there's a definitive edge to trading the long side this time of year. So going through, you'll see more red on the short trades during this time period. There's just more because the tendency is to be bullish. So the short trades are great, but the long trades are exquisite. That's where you want to be this time of year. You don't want to miss out on those when they happen. So we haven't gotten the buy signals yet. So this is perfect timing to get ready to trade these strategies. If you're not working with me on these yet, now's the time to gear up and get with me this week and see about what we have to do to get trading these and get up to speed on these strategies right away. So what I'm going to do is switch over to the charts now and show you one of the strategies, plus maybe one of the, I actually want to show you the seasonal chart on Thinkorswim, which nobody knows about. They added it several years ago. And this last weekend, Thinkorswim was, or TD Ameritrade, they were here in Santa Clara doing a presentation. And I actually spent some time with the guy who was out in the hallway, basically showing people how to use the platform. And we talked about the seasonality charts. He did not know how to use them. He knew they existed, but couldn't actually use them because he didn't know any purpose for them. I actually showed him how to use the seasonality charts on Thinkorswim. It was funny. And then he started showing other people because other people started gathering around and asking questions. But I'm a seasonality person. I showed him how to use the seasonality charts, and then he started showing some other people the exact same thing. So I'm going to switch over to the charts now. And first I'll show you the seasonal one. Let's see, go ahead and change the share, because it is interesting. And any questions you have, please interrupt me in a good way and ask questions. If you raise your hand, I won't see it, but just either type it in the chat window or unmute and go ahead and ask it. Okay, I'm going to change the share. And let me show you this here. What you're seeing right now is the Thinkorswim platform. And this is a seasonal chart of the S&P 500. On the data window here, on the right side, that is the current price and date. And what you see here is a weekly chart. This is a weekly chart, a weekly seasonal chart of the S&P in red. This is 20 in red. The red line represents 20 years of the S&P 500. Week to week, seasonal direction movement, okay? And to put these both on the same, and this green line shows the SPY for this year. So this is what you see, this green line is a weekly chart of the S&P 500 for this year. And what you see is the red line is a composite chart of the S&P 500 over the last 20 years. This is what the S&P did, percentage average movement, percentage-wise. If you use actual price, the numbers on the charts don't make any sense. So you have to switch the pricing on the right side to percentage, not price, percentage. So it'll show you relative percentage moves, okay? That's the only way you get them on the same chart, and then it'll make sense. So if you take a look, a lot of this year has actually lined up pretty well. S&P seasonally going down, went up a bit. Seasonally, it goes up this time. It goes sideways. See, it went sideways, and then this down move just happened here. This is exactly what happened. It went sideways and down. Right now, we're right here, okay? And a slight hook up. So we're right at the beginning of that 2 to 3 month period where we're looking for our first buy signals to capitalize on this end of year move. It's all in percentage moves. I can change this to QQQ, to NASDAQ. And you see a similar end of year pattern. It's a 2 to 3 month stretch where we're doing nothing but moving in one direction. Okay. So the seasonal charts are available on Thinkorswim, but you have to understand how to look at them. People I'm coaching, I can spend a little bit more time with you on these, how to use these, but this is the main one myself and Becky use every year, is the end of year one. This is what I always write about in everything we do, end of the year. Best time to trade, April is October through April, because we have different seasonal patterns beginning of the year also, that where we get nice trends one way or the other. They might be long, they might be short, but it's going to trend. So we can, that's how we capitalize on it. But this is a well-established trend that everyone should know about, okay? But it's just a matter of, I'm sure we've all heard of the Santa Claus rally and the Christmas end of year. We all heard of that. It's true. It's a statistical edge. Now, people have always asked me, what books should we read for trading? And I say, none. You don't learn to trade by reading books, okay? I'm going to, hang on a second. I'm going to show you something. One book is the only book I've ever in my life recommended. I'm going to pull it up on Amazon, and then I'll show you that link. Just 1 second, I want to find it. And it's literally one book that I read from cover to cover, and it's really helped my trading a lot, because it makes you understand what's going on in the market. You don't freak out sometimes because when you understand what's happening, you realize, hey, the market is doing exactly what it's supposed to do. Okay, I'm going to change the share real quick so you can see this. The Stock Traders Almanac, okay? This is, I read this for the first time probably 15 years ago, and you're going to see what's in here. They have gathered a lot of seasonal information, and this is the one book that you read. And once you understand how certain markets move at certain times, when you see what's happening in the market, you realize, you know, that's exactly what's normal and expected for this time of year, for whatever reason. It's statistically, when you see the market going up at a certain time, that's exactly what's expected. When you see the market going chopping and sideways, that's exactly what's expected. But this is a book, the only book I've ever really recommended, because it's 100% objective. It's not someone's opinion. They show you objective statistical information, and rather than opinions, okay, or specific strategies. They do have some strategies, but it shows you learn different market patterns. I think there might be one for commodities also, but this is the main one, the Stock Traders Almanac. And we've started looking at that, like I said, back in 2006, 2007. We met the people who were specialists in trading seasonal patterns. And then later on, we met Jake Bernstein, and he just took that seasonal stuff to another level for us. So we can really appreciate seasonal trading and how we can amplify strategies we already use to even be more profitable, right? So that is literally the only book I've ever recommended. And I'm going to change the share back to one of the charts now, and we go through one strategy. Okay, before we go on, do we have any questions on anything? Anything whatsoever? All right, feel free to unmute or type it in. Someone please pull out a calculator. I will be asking you for some numbers because we're going to go through a strategy, one of the long strategies. Some of you have seen it before, but it's one of those strategies that we trade a total of 6 strategies for the market to capitalize on long and short. So, and none of them have been valid yet since the market's been basically going down. So I'm going to pull up the NASDAQ. Oh, before we even do that, what I want to show you is the big picture chart before we even do that. What's happening in the market right now. All right. So we've been doing this at the beginning of each meetup. This is a monthly chart of the S&P 500. This blue line is a 40-period moving average. Monthly, each candle represents 1 month of data. 1 month, not day, week, it's 1 month. Going back here, this is 2005. 2005, we're trading above the 40-period moving average, and this is the Donchian line. The gold orange colored line is the Donchian line. And some of you are already familiar with our Donchian crossover. All right, so. Okay, so some of you are already familiar with the Donchian crossover. We're just gonna, for this monthly chart, we're just looking at this blue line, which is the 40-period moving average. This is our debacle in 2008, when we just crashed, broke down below the 40. And then 2009 rallied right back up above the 40. And we've been above it since then. Every couple of years, it pulls, the price market pulls back to the 40 and continues moving in this uptrend. So we've been in this massive uptrend since 2010. Here, 2016, since 2010, it took several years to even pull back to support levels of the monthly 40. Usually during these pullbacks, it gets very volatile. People on TV tells you the sky is falling. They'll try to panic you. That's why you got to have a big picture view of what's going on so you don't panic. You don't put all your money into this account because you're afraid. If you understand the big picture, you don't have fear of the markets because you understand the big picture, and you know that every couple of years, the market has to pull back to certain levels, especially when you're in a massive uptrend. Okay, here it pulled back in 2019. This was 2020. This was when everything shut down because of COVID. We had this pullback lasted a whole 3 weeks. For 3 weeks, the market just got crushed for 3 weeks. That was some of our most profitable trading. Those 3 weeks was some of our most profitable trading, okay? Because we had all of our sell signals doubling in value at the first target, which was outrageous. The volatility was awesome for our trading. It scared people. People on TV will once again panic. Everyone go to cash, everyone do this, we're gonna lose our 401. No, it just pulled back to support levels as it does every couple of years and then resumed the trend. Where are we right now? Same type of situation. It pulled back to the support levels. Just like back here, this past month, last week, September, it closed below that monthly 40. Right now, we're trading below it. If we were to get, if October closed below and lower, then we might have a deeper pullback. But there's a really good chance that, we're going to, before the month is over, before October is over, rally back up and get to above this monthly support level. Really good chance because we've been in this massive uptrend. The uptrend has not changed. We just get occasional pullbacks. So we actually set up really well because of this uptrend and pullback to support levels to see that end of year rally. Okay, so we position nice, but we haven't gotten our trade signals yet. Okay. Now I'm going to switch charts back to our daily and then go from there. Okay, so this is it monthly. Now I'm going to change. Okay. All right, so this is one of the strategies that I know many of you have seen before, one of the Donchian buys. And the blue line again is the 40-period moving average, but this is now a daily chart, not monthly. This is now a daily chart. So there's a 40-period simple moving average on the daily chart. This is the Donchian mean line from the Donchian channel indicator. And I'm not going through all the exact details for everything, for the criteria for each trade strategy. If you take a look at some of the videos online, we've gone through that in the past. For the people I'm coaching, we'll provide you with the details, the settings for every indicator. I will hand you all these charts already set up for either Thinkorswim or NinjaTrader. The charts will be set up for you. If you set up charts on your own, what will happen is that your charts will not look like our charts because the choices you make to set your charts up will not be the same choices we make to set our charts up. That could be as simple as displaying the bid, displaying the ask price, displaying the last price, or displaying the mid price. How you choose to display data on the screen is all options we choose in our settings. Okay, so they're not always just default options. There's things we choose to display things the way we display it. Okay, so that's why we provide you all the charts for both Thinkorswim and NinjaTrader. This one is Thinkorswim. Well, let's take a look at this one strategy, which we use for going long. Now, this is a Donchian cross. This is when this orange line crosses over the blue line. Okay. If you take a look at a data box on the right side, you see the values of the orange line. On this day, the orange line is the value is less than the blue line. So that's the Donchian is the orange line. On this day, the orange line 292.09 is now greater than the blue line. This is our crossover day. Okay, this is our setup. We use Jake Bernstein's setup trigger trade management criteria, or how we display it. The setup is visually what you look for. There are trigger confirmations. There are other details not shown here today, but you will see them in some of the previous videos I've posted, and I'll go through those in way detail when I coach you one-on-one. And but that's what we look for to confirm the trades are valid. So what it would look like on this day. So if we were doing our day-to-day review, here's what we'd be looking at. Okay, on this day, did the orange line cross the blue line? No, you have no trade signal. And you go, the next day, did the orange line cross the blue line? No. Next day, the orange line cross the blue line? No, no trade signal. Did the orange line cross the blue line? No. Did the orange line cross the blue line? Hey, wait a second, it looks like it might have crossed, but I can't maybe see with my eyes, so I can either zoom in on the right side or I can look at the data bar and said, hey, the orange line crossed the blue line. Okay, perfect. I have a valid trade setup. So that's visually what it's that simple to find the opportunity. You find the setup. Now there are a couple of criteria to confirm it. One involves the Bollinger Band and the number of days that this orange line was below the blue line. That's the confirmation. But once we see this crossover and the couple of trigger confirmations, then we go to our statistics. I'll show you an example of those stats in a little bit. But I know that the QQQ, the NASDAQ, has about 88% of the time when I see this trade signal valid, that I know 88% of the time that the Qs, the NASDAQ, will go higher by a certain amount within the next 30 to 60 days, 88% of the time. And how we measure the amount of movement expected is volatility. But we don't look at option volatility, we look at the volatility of the ETF. And the volatility of the ETF is the average true range. This indicator at the bottom, ATR, and you see the ATR value here, average true range. That, and we use a 5-period ATR usually. So that's basically telling us that number. On this day, the ATR is $7.20. It's telling us on average, every 5 days, the QQQ is moving $7.20 based on the current market volatility. Okay, that's what the ATR tells us. We don't do analysis on the options, we do analysis on the ETFs. So it's really a whole lot easier, What we use options for is to capitalize on the opportunity. Rather than buying the shares, we just buy calls and puts. And some of you may have had the experience, you buy calls, you buy puts, and they expire worthless, or the time decay kills it. That's because you don't know what you don't know your numbers to be able to determine if what you're paying and is appropriate or too expensive, and also not knowing how much time you actually need. We do this on ETFs, not so much stocks are different, but on ETFs, because on the ETF, the implied volatility is not an issue. You don't have that volatility crush. Time decay doesn't hurt you as much with the ETFs as it does with stocks. So we can just buy calls and puts. And I have criteria that I'll show people when the price of the option is too expensive. And that's criteria learned from placing thousands and thousands and thousands of trades over the years. That's lessons learned. That's not on any book. That is just what we've learned from placing so many trades. How much is too much to pay, right? So now I need someone with a calculator. So someone pull a calculator out. We know the ATR is $7.20. We're going to be entering this trade the next day. We're buying in the money call option, the first strike in the money. The next day, the market opened at, the opening price was 306.43. There's usually an option strike every point. So the first in the money strike, if it opened at 306.43, the first in the money would be 306. Okay, so we're buying the 306 call option, and it would be, if this date is 7/21, we're looking at an September or October option, depending on what the statistics say. Okay, it'll be a September or October option at the earliest, okay, depending on what the stats say. Because we have stats that say 1 expiration cycle or 2 expiration cycles, and I'll show you what that means in a little bit. But it would be the September option or October option. All right, so now someone with a calculator, pull it out. What is the open price? Is $306.43, $306.43. What is $306.43 and add it to 720? So what is $7.20 plus 306.43? And Aaron wrote 313.63. Okay, that is going to be our first profit objective. Okay, and it will either be with the September or the October option. All right, so what do we do? As long as the ETF is at or below 306.43, as long as the ETF is below 306.43, we're going to be buying the first in the money option. If you waited that day and you got in, you took this trade when it was at 302.78, you'd be buying the 302 strike option. If you got in when it was at 301.16, then you'd be buying the 301 strike option. Okay. If you get in lower, it just means you now have a bigger target. If you got in right at the open, your target is 720. If you got in a dollar lower at 305.20 or 305.43, then you can now have an $8.20 target. If you got in a dollar lower, you can have a $9.20 target. So depending on where you get into the trade, you can have a bigger potential profit. Okay, so let's see how this plays out. You could have gotten into this trade this day, or this day, because all these 3 days, the price was still below that open price the next day. Our entry is going to be at the open price of the ETF the next day or lower. So you get in, it goes against you for a couple of days, then cha-ching. When is the first target hit? 313.63. High right here. On this day, the first target is hit. Okay. During this time, we don't need to be looking at our computer. All these orders are automated. So we go in the next day. So here's the trade valid on this day. On this day, sometime this day when the ETF is below the open price, not when it's above it, when it's below the open price, you'll have an order that says limit order to buy the first in the money strike price. It is either to be September or October option. Okay. And if I'm working with you, I will go through that in more detail, how to select, because it's all about statistics plus pricing. Okay. So you just have to make a choice. After you buy the call option or options, you put in an exit order. These trades can take anywhere from a few hours to a few days to a few weeks to 1 to 2 months to reach the first target. Your risk is what you pay for the option. Max risk, 2% of your account, no more than 2%. Well, there are situations where you might go more, but 2% is a nice, safe, professional level, risk level for your account, okay? Meaning if you have a $50,000 account, that would be $1,000 max risk. Can you go 2,000? Yeah, but think about how many trades you might be placing when you do all the numbers, and you might find yourself, it's like, it's a little bit too high a risk. So if you have a smaller account, you may have to trade smaller, and some of these ETFs the option might be too expensive for a smaller account. That's why I work with you. Why we have 28 ETFs. Some might just be too expensive for your account size. So we have to trade. Not the big boys are the Qs, the DIA to diamonds and SPY. Those are the biggest, most expensive options, okay? So if QQQ is too expensive, XLK might be the next best thing. That is technology, okay? So that's the type of thing that we look at one-on-one with you. If one's too expensive, you got to pass on that. Even if the stats are really good, if it's too expensive for your account, you got to pass. Okay. So let's take a look at this, how this played out again here. So this is a type of trade where your first target is getting hit right here. If you're trading multiple contracts, you can sell one part of your position, lock in profit. A move like this is going to be about a 20 to 30% return overall at the first target for the whole position. But if you were to sell, let's say you have two contracts, you sold one, you put that profit into your pocket, and then you move up stop losses on the remaining contracts. So let's say you bought the contract for $6, and at the first target it's now worth $7.50, then you would sell one contract for $7.50. So you lock in that 25% return or whatever it might be. About 25, if you bought it for 600, it's now 750, 25% return. So that money is in your pocket. On the remaining contract, you bought it for 600, it's now worth 750, so you have guaranteed profit. So now you can put a stop loss in on that remaining contract somewhere between what you paid and the current price. So somewhere between what you paid for $6 and the current price of $7.50, you have a stop loss in. Let's say you have your stop loss at $6.50. That means if the price of the option came back below $6.50, it would stop you out, lock in your profit of 50 cents, and you're gone, and you trade done with the position. But if you put your stop loss in and the price keeps going higher, like it did here, you're going to have a second target in play, and your second target will be 2 times what you paid for the option. So you're going to be looking to double your money on that call option. This is a type of trade where you would double your money. Quick moves like this, straight up. This is the cha-ching type trade. It's like, this is what you want when it just keeps going up every day. It gaps up, it just keeps going. These are the ones that make you nice money really fast. They happen a couple times per year, trades like this. So you never know which will be the ones that are the nice money makers, but you position yourself for success whenever you can. So these trades happen all the time. This was recently, this was just a couple months ago. Going back a little ways at the Qs, here we had a losing trade. This was in April. Launching cross, that's a loss. Going back a little further, cross up, nice win. Very nice win. Going back, super nice win. This is the type of trade that you can double and triple your money depending on what the second targets are. Okay, just went parabolic, straight up. Here, another, boom, win. Setup happens over and over again. You got your buy signal, goes against you for a couple of days, then cha-ching. Remember, so let me show you what I mean by expiration cycles also. The trade was valid right here. This line here is expiration Friday, the 3rd Friday of the month. So from this Monday until the next expiration month's Friday, this is one cycle. From starting from Monday through expiration Friday is one cycle. So if the plan says you need 1 cycle of time, this is 1 cycle of time. If the plan says you need 2 cycles of time, this is 2 cycles of time. So if the plan says 2 cycles will give you 93% wins, then if the trade was valid here, you need 2 cycles, 1, 2, we'd be getting December options. If the plan says you need 1 cycle for a certain percentage wins, then you'd be getting November options, okay? 2 is always better. 2 is the sweet spot. You pay more sometimes, but 2 expiration cycles is the sweet spot for all of our strategies to get the best results, okay? But yes, this is a trade setup that happens over and over again by cha-ching. And it always happens after the market declines. The market will decline and then turn up and we get our buy signal. The market will decline, turn up, and we get our buy signal. The market will decline like it is now, turn up, and we get our buy signal. Market will decline, all this volatility here, turn up, and then we get our buy signal. Okay? Going to where we are right now. This happens all the time. This is all the time. That's not even our #1 strategy for buying market bottoms. We have another strategy, which is we traded longer than any other strategy. It's the Ichimoku hook. That's the one that actually will get you in before this strategy even gets you in. But where are we now? We're in this decline. Okay? We're waiting for that Ichimoku strategy to give us our first buy signal, and we're waiting for the Donchians to give us our first buy signal. Until we get our buy signals, we don't go long. We don't guess where the market bottoms are, okay? We don't guess. We wait for our trade signals. And statistically, let me do a quick change here. I always think I want to do this really fast and finish up within an hour, but it never lasts an hour. It always goes way longer. All right. I'm going to show you some stats so we know what we trade and when to trade it. So here is our sectors which we trade, 28 of them. With options, we get a very, very diversified portfolio, Now, this is one of the strategies, the T-line, buy and sell. These are the long trades, the long side of that strategy. And if you see here, these are the stats for 1 expiration cycle of time, and this is the stats for 2 expiration cycles of time on the long side. You will pay usually less for less time in the option, and you pay more expensive options for more time. However, in most cases, you're better off paying a little bit more for the extra time, because the extra time is what gives us the higher probabilities of having a winner. Okay, percentage-wise, you might make a little bit more by paying less upfront, but you're going to have fewer losses by buying more time. So what you see in light blue is 84% or higher. So if I were to get EFA valid, EFA is Australian markets, EWG is Germany, EWH is Hong Kong. So we trade international markets also. If we got this trade signal valid with the T-line buy, not the Donchian, we just look at Donchian, there's a different strategy. Remember, we trade 6 strategies total. This is one of those 6. If we got EFA valid for Australia, we know by looking at these stats, we will not be doing 1 expiration cycle of time. Or else we just setting up ourselves for failure and losses. We want to have 2 expiration cycles of time, because 87% of the time, that first target will be reached before expiration, given our trade strategies. Same thing, EWG Germany goes from 83 to 93. 67, if we had EWH, we would not trade EWH with this strategy at all. With this particular strategy, it doesn't work. Don't assume every symbol trades the same way. It's not realistic. Different symbols, different markets move differently. Not every strategy will work on every market. There is no one strategy that works on everything, okay? So be aware of that. But our grouping of ETFs worked extremely well with these strategies, and we've been trading it for so many years now. We know it works. This year, our future strategies have been kind of on the downside. So it's kind of negative for this year, but the option strategies have always been just strong, okay? So that's the long side of that strategy. Here's the T-line on the short side. This is the T-line short. Once again, this is what we expect win-to-loss percentage on the short side. And this trades market tops and market bottoms and in between. So this is the in between. So after the market starts moving downward, we get these sell signals. We have a different strategy for selling the market tops. This is the Donchian hook, the D hook. Another great strategy. We have a couple of these right now on some of the energy sectors. They might have already hit the first target. But once again, here's the difference between one expiration cycle and two. It goes from 81% to 89%. Okay, so I'm going to scroll down. This is our strategy for buying market bottoms. This is the one we have traded longer than any other strategy in our portfolio. This is the one we look for market bottoms. This will be our very first buy signal in most cases. The Donchian cross will be sometimes first, but usually second. This will be our very first one. This is usually what comes first. So this is what we're looking for right now, this hook, this Ichimoku strategy, to give us our very first buy signal. And that's going to be, and we're looking for that, like I showed you, between 9:15 and 11:15. That's the sweet spot to get, but we're just waiting for our signal. We don't just guess. We don't just buy randomly, wait for the trade signal. And all these percentages go way higher at the end of the year during that time period. So this is why I always say, now's the time to trade. And this is the time. This is the one where we short market tops. It is not that hard to find market tops. It's just that no one shows it to you. What had happened is a lot of the people we learned from, myself and Becky, back in those days, they showed us their actual personal trading records. They showed us their actual strategies. They showed us the details of everything. They just freely shared information with us. And that was awesome. Those people who we learned from back then cannot do that anymore legally, because they became certified financial advisors, so on and so forth, certified everything, certified money managers, and legally they are no longer allowed to show us the details. So luckily we learned from them back when they were able to show us the details. So we learned from great people who showed us exactly how they trade, the ins and outs, the specifics. If I were to become certified, I couldn't show you this details either, like what we just showed on the strategy. But those people now just sell trade signals. You can buy trade signals from them, but they can't show you how the trade signals were generated. So, but luckily we learned from them way back when. How we show you, you can generate your own trade signals. You don't need to subscribe to anyone to tell you what to trade, when to trade, what the stats are, how to manage positions. We believe in teaching people how to do it themselves so they're not dependent on others. Now, we try to help you over a period of months. I do it all training one-on-one, all coaching one-on-one, but it is a business. You have to be willing to do your work every day. It doesn't take, you don't have to be there at 6 something in the morning, but you do have to spend some time, a little bit each day after hours. All analysis is done after hours, so after 1 p.m. to go through your trades and your strategies to see what's valid, what's not valid. It takes about 30 to 60 minutes a day. And what I've been doing for people is actually sending them trade candidates each evening. For new people, I'll do it for you for the first 3 to 6 months at no charge to get you going. And if you want to continue that after 3 to 6 months, then it's like $49 a month. So, and then I'll keep emailing you those. Everyone, I give access to our group's Facebook page. Anyone that wants access to the Facebook page who is on the meetup, contact me, and I will inquire about joining the meetup, joining the Facebook group. Since we tried to filter it, I don't want the people who were on before, the people we kicked off. So basically, if you're on right now, you're good. Okay, so feel free to contact me. And like I said, I have a video of who's here right now. It's all being recorded, so I know who's on and who the previous people were that we don't want on the site. So it is a members only group, so I have to approve anyone joining, right? But it's a place where you can communicate with others about generally whatever you want. But as far as the strategies go, That I still do one-on-one with people, and I email the trades to people who are my coaching clients each evening. And that helps you get going and verify what you're seeing is the same as what we're seeing. And that's really a good way to get you started and hopefully trading live as quickly as possible, because you want to jump on this now. If you're not already doing this with me, contact me today, contact me this week, because as soon as we get those buy signals, we want to capitalize this time of year as soon as possible. This is the best time to trade. So we're just waiting for those buy signals. So hopefully within the next week or two, we get them, but be ready. This is when we make money. And there was a couple of years when we never got a buy signal perfect. The market just went down, but we also trade short. So, but all of our short trades are exhausted. We're waiting for it to turn up. And like I said, we're in that massive uptrend. So we're just waiting for that buy, for that trend to kick in, and we back up above that uptrending forward. That's what I'm looking for and expecting. It may be this week, it might be next week, but that's what we're looking for. And that first buy signal. And let's ride that baby up through the end of the year and capitalize on that end of year seasonal, because it's a great pattern that repeats consistently. All right. So before I'm going to go do another screen change back to the handout. Do we have any questions so far on anything whatsoever? Anything at all? Okay, hang on a second. Oh yeah, what I gotta do is to change this. And I want to change, now I'm changing the share back to the screen. Okay. So this is what we're looking for this year. This is 40 years, almost about 38 years worth of data to generate this. So if you haven't been to Seasonal Trader, it's good to go there, get a free account. You get it's free for a month. Just to play around a little bit, take a look at some of the seasonal charts. We do these charts for some of our commodity trades. Like there's certain times of year you trade energy long or trade energy short, and you will see the same type of trend. So it's good to be aware of these, but this is the one we trade in the market every year. And we just wait patiently for when it comes up, because we know this is when we're going to make money, because it's a 2 to 3 month period of bias to the upside. Definitive, clear-cut bias to the upside. Okay. Now, if anyone is interested in working with me, we do 2 coaching programs where we go through all the 6 strategies. And there's a couple I give you additionally for free anyway, because you do ask for it. Ichimoku's, there's one Ichimoku, 1 or 2 of them I'll give it to you for free. Just have to ask for it. The Senku and the Kumo, those for any of the coaching clients. But we go through 6 strategies, the ones I showed you that are part of that spreadsheet that showed all those wins. This is what we go through with these strategies, and it's all one-on-one. If you already have some option experience, it helps a lot, okay? If you don't, I can work with you on that, not a problem. So, but if you already have some kind of experience trading options, you just want to let's kick it into overdrive, especially this time of year. If there's no better time to start this than right now. If you're ever thinking about it, considering it, now is the time for this, for these strategies, because we don't have the buy signals yet. So you have time to prep. And so we're just waiting patiently. I know some of the coaching clients are on here right now, and y'all know we haven't had the buy signals yet. Some of you had some silver trades, long and short, they're in play, and some other energy stocks, some XLE long was already hitting targets, and XOP for oil was already hitting targets. So, but everything is one-on-one. I prefer to work in person if at all possible. I'm in Santa Clara, California. If we can't work in person, then we'll use Zoom. That's okay. But I prefer to work in person if at all possible. It's just easier, at least the first time. Make sure your computer is set up properly and you're ready to go. And if you want the full deal where we get the weekly chart options, market internals, and a daily, then that's a lot more and take a bit longer. But the weekly chart strategies, you only have to look at it on weekends only. No, there's nothing to do on the weekdays other than Monday morning. Monday morning, you place your trade, nothing really else to do until the following weekend. So these are weekly chart trades. It might be 8 to 15 trades a month. You do your analysis on the weekends only. Weekends only is when you do the analysis, place your trades Monday morning, and then there really isn't much else for you to do until the following weekend. Okay, so you got to work Monday morning. Definitely Monday morning, you get some work done to get your trades placed. And then after that, you're off till the next weekend for the most part. Okay, so the weekly charts are for people who really don't have time during the week, but still want to capitalize from the markets. And this year, the weekly stuff has been really, really, really good trading. So anyway, so for this weekly strategy, I will take $500 off this price for anyone wanting to do the combined full program. Let me know before this week is over. I'll take $500 off this price. For anyone on the meetup right now that wants to do just the daily chart strategies, the one we've talked about today as a whole group, because you have to get the full benefit, what you see in that spreadsheet with all those wins, you got to trade the group, not just one strategy. You got to trade the group to get them all. And that's $1,750. I'll take $100 off this price for $1,650. Let me know today or by early this week, and we get you going as soon as possible, because we really want to get these going ASAP. For people who are on the meetup right now, who I'm already working with, if you have any questions, let me know this afternoon, because we are right at that borderline where we expect those buy signals sometime soon. So let me know so we can answer any questions you have and be ready. All right, so do we have any questions from anyone at all about that end of year seasonal pattern, about that one strategy which we went over? I did it generally this time. If you look at our videos online, you'll find some more details. Today was just general. And the other 5 strategies that I go over in with you one-on-one in one-on-one coaching sessions. The other 5 strategies to trade the group as a whole, 6 strategies. Any questions on anything whatsoever? I'm open to any questions. And I will be editing the recording to take that stuff out at the beginning where we were distracted, but it looks like all those people are gone now, so that's a good thing. All right, any questions at all? If not, we're going to go ahead and sign off, and we'll probably do maybe one more meetup this year, probably middle of November, but that'll probably be our last meetup. Actually, we might do 2. We might do 1 futures or 1 options. Let people tell me what they want. I know everyone really, really likes options. The majority of people prefer the options. So that's where my heavy focus will be on options. People have been the most happy, the most satisfied, getting the overall best results when they place the option trades. That has been very consistent for years and years and years now. So that's where our focus will be, on options. Futures, I still like futures. It's been a sucky year for the futures, but that's okay. You trade through it, and because the previous years was like super awesome, excellent. This year was a down year, but I still like trading the futures, and I trade options. But this time of year, my focus is heavily on options as they become valid. All right, if you don't have any questions, I'm going to go ahead and end our meetup for now, and we'll see another one probably in maybe 3 weeks or so. If you interested in coaching, email me, call me. I will send this recording out probably in the next day or 2. But yeah, email me or call me, and I'll put on the contact. I'll put on the contact page on our website. I'll put that link into the chat window. Contact, that'll be in chat window, CONTACT. So put the contact form in the chat window. You can fill that out, send me whatever questions you have. If you want to set up a type of chat about your particular situation, because we all have different trading situations. And I know some people I talk to have been screwed in the past in some way, shape, or form. So before they work with me, they want questions answered, and so I believe in that also. So definitely check out our website. Go to here's where the handouts are. The details of what we do is all published on the website. As you see here, here are the options in the lower half. So talk to me first, because I want to make sure everyone has realistic expectations. Realistic, I ask people sometimes, if you have 100 grand account, how much do you expect to make in 1 year? And they tell me 500,000. Not realistic, okay? So I want to make sure people have realistic expectations of how much they expect to make given a certain size account they're working with and how long it takes to get there, okay? Because your work situation, your home life situation, your available time to spend each day, type of computer you have, everything creates a factor in how you are going to approach trading, because 10 people trading the same strategy will have totally different results. One might have some certain results because they're single, no kids, no wife, no husband, they live alone, they have good income, and they work from home. Another person can have the exact same thing, except they have to be on a train at 6 something in the morning commuting to work, and they get home at 6 or 7 something in the evening, and then they have other responsibilities in the evening. And so different people have different schedules, different responsibilities, different lifestyles. And so we try to tailor your trading based upon your particular situation, okay? And because it's not all the same, okay? So no, don't let anyone tell you, well, you're gonna have a group and everyone's gonna trade the same. No, it's not realistic. If you have a 10 grand account, you cannot trade the same as someone who has a 50 grand account, and a 50 grand person can't trade the same as someone who has $1 million account. It's gonna be totally different, okay? So a different mindset also, a different approach, and different things you can trade. So contact me and we'll set up a time to chat, and you guys have a good day, and see you all in probably about 3 weeks or so. Thank you.